My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain you, but it's to educate and teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. This market has given me a split personality, including on a day like today, where the NASDAQ roared 1%, S&P gained 0.27%, and the Dow declined 86 points. We're about to get a set of unbelievably positive numbers from big retailers and restaurant chains, which is fabulous if you own those stocks. But frankly, it is horrifying if you think about why they are thriving. This week, we hear from Walmart. Buy, buy, buy. From Home Depot. Buy, buy, buy. Lowe's. Buy, buy, buy. And Target. Buy, buy, buy. And if their stocks get hit for any reason, sell, you have to buy them. Because these major operators are up against general merchandisers, hardware stores, sporting goods stores, and lumber yards that simply cannot compete because they were deemed non-essential by the government. And I fear they'll never get those lost customers back, not with the prices these big guys charge. The winners have so many advantages over the little guy that I'm amazed there's still any competition whatsoever. And soon I have fear that there won't be. And that's what's really driving me nuts. I love when these big household names go higher, but I hate one of the reasons they're going higher. Their small business competitors are being wiped out. A lot of these smaller outfits have been able to hold their own before COVID. But now the big guys have crafted phenomenal same-day delivery services that only Amazon can beat. Anyone, by the way, who's used Shipped from Target knows they can send you stuff within an hour. Sometimes we use them for props on the show. It's fabulous. Mom and pop outfits can't compete with that in the age of social distancing. We constantly hear that our economy is going through 5 years' worth of technological change in a matter of months. But that also includes retail. And now the PPP's run out. That was that government program, gave you some money. Well, now everybody's left to their own devices. If anything, it's even worse for restaurants, where PPP was so valuable. Today, Domino's announced that it needs 20,000 more delivery experts. They need pizza makers, managers, assistant managers. Now, let's brainstorm on this together. I mean, do you think they're hiring all these people because of a surge in demand for pizza versus burgers versus chicken versus anything else? No. It's because they're taking share from smaller pizza parlors that are more reliant on indoor seating and don't have the same kind of delivery infrastructure and can never afford it. Right now, there are plenty of restaurants making do with outdoor seating. It's so exciting, right? But it reminds me of Vienna. But that goes away the moment the weather gets too cold. And beware, if you're too crowded, the authorities might come and shut you down in a heartbeat. My Twitter feed is filled with people saying restaurants will always have a following. That is not the point. Until we get a vaccine, our following is cut in half because of physical distancing in the bar and the restaurant. And the state doesn't want lines out the door either. More importantly, there's the liquor issue. As someone who's in the restaurant business, I can tell you that the real money's in drinks. Growing up, my dad would never let us start drinking until the food came because he knew that's how they got you. So a lot of pizza parlors will have tables inside where they can serve you alcohol, and that's where the profit margin is, and those tables are being cut in half. They got to take them out. If they can't have people inside, think New York City, it's devastating. Throw in the extortionate cut demanded by the delivery services, which are all combining anyway and going to not lower their prices. A lot of these places will not be able to stay in business and will be gone within a matter of weeks. Domino's knows this, which is why they're getting ready to poach people. Obviously, Domino's doesn't make the best pizza in the world, though their tomato pie with banana peppers is just killer. But I love ordering from them because I can put the tip on the bill, and then they'll put the pizza on a contactless pedestal that makes you feel a lot more comfortable than if you order from the local guys. It's kind of like when you were a little boy or girl, I don't know, and you would like ring the bell and then you'd like run away, and people think it's funny. Well, that's what they do. There's like nobody out there. It's great. Pizza Hut and Papa John's are set up for delivery, too. They don't care if they can't have people inside. It's not a good business. Wingstop, think that one. When we get delivery orders for our restaurant, we use our own waiters. It's the only way we can afford to do it. And believe me, it's a lot less lucrative than having people eat inside the darn restaurant, have a good bottle of wine. We're seeing the same dynamic across the whole industry. Darden, the parent of Olive Garden, and Yum, the parent of KFC, Pizza Hut, and Taco Bell, both have the wherewithal to handle a dramatic decline in the number of seats at the restaurant. One of Pizza Hut's biggest franchise may have to close 300 locations because of the in-store dining issues I'm talking about. Yet the stock, Yum, it's still a buy. On the other hand, if your local pizza parlor were publicly traded, you short that thing until the cows came home. The big guys have easily transitioned to a takeout and delivery model. Chipotle's so good at digital that they're doing better than ever. I just wish that $1,200 stock would split so more home gamers could own a piece of this great company. I want people to say, I own a piece of Chipotle. Brian Niccol, I want them to, Jack Hartung, CFO, give us a chance to own a piece of Chipotle. Some of the analysts are recommending chains like Brinker, the parent of Chili's, symbol EAT, because it's evolved into a takeout model almost overnight. The fewer people it has in its restaurants, the more likely it is that these smaller outfits will go under. That's right. It's a win for Brinker if they can lure other people from other restaurants with their takeout. How are these big chains so much more profitable? Because they're big. It's all about scale. Chipotle sells Topo Chico. That's the best fizzy water in the world. It's from Mexico. They sell it for less than we pay for it at Bar San Miguel, my small plate Mexican place. That's how business works. When you have the volume, when you can buy in bulk, you get lower prices. Yeah, wholesale prices can't beat it. Starbucks could be in the same category. If you're a landlord, you want a Starbucks in your property. You know they can pay the rent, although they may not pay as much as you would want to anymore. But it sure beats being empty. How about the big box chains? Again, their scale lets them buy stuff at incredibly low prices. You'll hear that tomorrow when Walmart reports. I remember Jim Singal, the former CEO of Costco, told me that some men's store managers would just buy their shirts directly from Costco because it was cheaper than buying them from the suppliers. What does that tell you about those companies' prospects? And that was before COVID made life even harder for small business. Yet most people just don't seem to realize how precarious these businesses are. There was an amazing piece from Jefferies this very morning titled Fitness Wars, Planet Fitness Traffic Monitor Update. We see stabilization ahead. Turns out in Georgia, Florida, and Texas, Planet Fitness is seeing 61%, 58%, and 53% of their normal traffic. Not so hot, right? Hold it. According to Jefferies, there are 35,000 independently owned and operated gyms in the United States. They don't have the deep pockets like Planet Fitness. Many of them are even more expensive, which is not great in a recession, right? And it's harder for them to keep clean. A lot of these independent gyms are probably going to go under, and a lot of that business is going to go to the bargain that is Planet Fitness. Now, for months, the Paycheck Protection Program did keep a lot of these small operators in the game. It's over, and then Congress couldn't compromise on a new deal, and the Senate won't be back in session until September 8th, which means the small businesses that need a bailout absolutely won't be getting one anytime soon, which is why I fought so passionately to get that done and failed. Who am I? I'm a TV guy, but I did try to bring them both together. Anyway, you could argue that this is simply how capitalism is supposed to work, and I hear that all the time, too. Survival of the fittest. Wasn't that great? In any other situation, I'd probably even agree, but this is an extinction-level event for small businesses, for 15 million people. I don't know about you. I'd rather live in a world with some big businesses and some small ones than a world where only the biggest operators can survive. We need more than Pizza Hut and KFC and Olive Garden. Men cannot live on infinite breadsticks alone. Unfortunately, with costs staying the same, not like landlords are slashing the rent, social distancing, meaning that you can only seat half the number of customers, a lot of these independent restaurants and retailers just can't survive. Eventually, we're going to get a vaccine. But I doubt they'll be able to hold out that long unless they're being run as a labor of love rather than a labor of, making money. So here's the bottom line. If any of these big box outfits disappoint when they report this week, remember, this could be the last quarter where they actually face significant independent competition funded by PPP. After that, the small guys are mostly done, thanks to a pandemic nobody saw coming and a political class that just can't get the job done. Luckily for your portfolio, though, mom and pop outfits aren't publicly traded, which is how the market can keep roaring despite the small business devastation.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.